And I say that to Chris Swift of Swift Trading. He's based in Nashville, and he joins us right now. Good morning.
Good morning.
My goodness, this is we got to quit meeting like this. This is another day of crazy market activity.
It is.
You probably fully expected this, though, today to start out the week. Now, we have a WASDE report coming out at midweek.
Right.
Do you even care?
Yes, we do. We do. This is a one step at a time ordeal. Everything has to be taken with a grain of salt because there are changing fundamentals that we have no control over, nor do we even really have any foresight into. So we segregate the markets to wheat being the most impacted by this current situation. Corn influenced next because of its close proximity as a cereal grain to the wheat, and then beans are seemingly the only thing there is the bean oil, and that it primarily has more to do with the Indonesian and Malaysian palm oil crops than it does anything with this situation in the Ukraine.
So Ukraine is, I think they were going to be the world's third largest wheat exporter this year.
Right.
They were going to be. Now we don't even know if they can get all the crop harvested now, but I believe they were going to be the fourth largest exporter as well, right? Of corn.
Of corn, yes.
Yeah.
So it's interesting to see how we are handling these situations because we're not real sure that we can do anything about it whatsoever. And it is truly whether or not they can actually get that winter wheat harvested or not, whether or not there's going to be impacts into the farming community, whether they can't get to it or not. So it's going to be pretty important for a long time to come until you get some kind of resolve.
So on the crude oil market, and we can take a look at the crude prices right now, is this crude oil market, which is now showing April up 348 on West Texas crude, it's at 119.16, but I'm sure you're fully aware that it hit over 130 overnight. Is this crude oil market going to keep the corn from falling out of bed?
I don't know. That's a tough question. I'm not real sure because we are dealing with several different dynamics of between the corn and the crude oil and our position as a world leader. How do we say, Russia, I know we still import oil from you, but yet we don't want you to do these kinds of things. So I don't know where that boundary exceeds or can be cut back to that allows us to go back to a free trading nation as we generally are. But I just don't know. It's a tough question. It's a good question, but I don't know.
And farmers have some tough decisions to make right now. Should they book diesel fuel and gasoline ahead for this year, or what? Or just wait it out. Okay, we're going to pause right here, and then we'll bring Chris back here in just a moment, and we'll analyze the latest in our livestock trade next. Okay, we're back with Chris Swift of Swift Trading in Nashville. Let's take a look at our livestock trade now. And on live cattle, if we go to the big board, we are just slightly weaker now. Not very much, Chris. April only down one tick. That's 2.5 cents lower at 135.75. Now it's down 10. June down 15 cents at 132.37. So while it's not totally collapsing, it has come back about $1 off of our earlier high of the day, though, so that could be a bit of a concern as well. On the feeder cattle market, we started out with some sizable gains, and everything is just kind of eroding here. April only 72 higher now at 157.97. That's about $1.50 off of our earlier high of the day. We have the May contract 65 higher. You go out to the late summer months, and August and September are 20 to 30 lower. So we have turned mixed now on the feeder cattle trade. Lean hogs, they're seeing follow-through selling, apparently, after going limit down on the nearby contracts last Friday. Now you have the most weakness in the deferreds. Now, why would that be, Chris?
I think you got a lot of question as to how good this demand will be for our meat proteins in relation to the inflation that we've got. We understand that the supplies have been deficit for quite a while, and that's why we've seen both cattle and hog prices rise recently. And then over the last 5 or 6 days, as this particular event has escalated, now people are going, wow, are we really going to be able to move this beef and pork at these prices with all of the other aspects the consumer's going through?
I know I've heard stories about the shortages starting to show up on the shelves in grocery stores, and it sounds like from what I've been hearing, it's becoming more and more evident, especially at the meat counter, where the stuff that's on sale, well, the bins will be empty.
Right.
It's just gone. And the higher price stuff, people are kind of backing away from it a little bit. Is that just going to get worse, do you think?
I think so, and that's all primarily due to our distribution channels. We have very weakened distribution channels, and I notice that a lot. To go to the grocery store and you see a lot of empty shelf spaces and products that we know we used to be able to buy that they just aren't making anymore, to try to concentrate on those more popular products that they sell.
All in all, this winter has been pretty decent for cattle production, but a lot of cattle have been pulled off of the wheat grazing because there's no wheat.
That's right.
So what does that mean heading into spring now on cattle?
Well, I think we'll be shorter of what we would consider real heavy wheat pasture inventory coming off, and we're just not going to have that this year. And we've already seen 1% lower in the month of January placement, even with a hard pull. February is probably going to be a little bit lower on placements, again with another hard pull. And this first week of March that we've seen already shows about a 15–20% fewer animals marketed this week than what we did year over year.
Okay, well, you heard it right from this guy, Chris Swift. Chris, thank you for coming in
Always
again.
a pleasure, Marlin.
I always look forward to talking with you in person. Chris Swift of Swift Trading in Nashville. Janet, that's a look at the markets. Back to you.